Vedanta's plan to trim down its $7.7 billion debt continues to face challenges. In the latest development, an unnamed government official has told a financial daily that instead of handing out cash, Hindustan Zinc Limited should explore alternative strategies for financing its proposed $2.98 billion acquisition of Vedanta Limited's zinc assets. The official added that the government could ask Hindustan Zinc or HZL to consider share swaps, warrants, or rights issues for purchasing the concerned assets. The government's rationale is that since it's a stakeholder in the company and has a right to its cash reserves, it will not allow its use for a related party transaction. Also, the Ministry of Mines reportedly views the proposed acquisition as being against minority shareholder rights. The ministry has also written to the markets regulator, reiterating its opposition to the deal. Vedanta owns a 64.9% stake in HZL, while the government owns 29.5%. While much smaller than before, Hindustan Zinc reportedly has cash reserves of $2 billion. So, what are the details of the proposed acquisition? On January 19th, the HZL board approved the acquisition of Vedanta Zinc International assets of THL Zinc Ventures Limited, Mauritius, a wholly owned subsidiary of Vedanta Limited through THL Zinc Limited, Mauritius. The proposed cash deal involving Vedanta Limited offloading THL Zinc Limited, Mauritius to Hindustan Zinc would have taken care of the liquidity needs of mining giant Vedanta Resources, since it owns a 70% stake in Vedanta Limited. But the government's opposition to the Hindustan Zinc THL Zinc Limited deal has put Anil Agarwal's plans to trim down the $7.7 billion net debt of Vedanta Resources in jeopardy. The development comes after S&P Global Ratings raised doubts about the financial health of the group. According to the ratings agency, the ability of Vedanta Resources to meet its financial obligations beyond September will depend on a planned $2 billion fundraising and the proposed sale of THL Zinc Limited. The latter is in doubt, however, as the government-nominated directors on Hindustan Zinc's board have opposed the acquisition. And in a February 17th letter, the government urged the company to explore other cashless methods for acquiring these assets, and even threatened to explore legal avenues if Hindustan Zinc still decided to proceed with the purchase. Anil Agarwal's attempts to secure finances for $1.5 billion in bond and loan repayments between September 2023 and January 2024 have already been hit. The uncertainty has hit Vedanta Resources bondholders and reportedly driven the price of the August 2024 note below 70 cents on the dollar. The group's credit rating, which is already in the junk bond category, could take a further hit if this fundraising doesn't go as planned. So, is Vedanta in trouble?
As such, it looks like the promoter holding company, which is Vedanta Resources Limited, a lot of debt which was taken there to acquire mines or to acquire these mining assets across the world are due for refinancing later this year, due for repayment later this year. So that is the impending reason why Vedanta promoters need to are on the lookout for cash, right? I mean, so, and that is the reason why they would like to utilize the cash reserves that Hindustan Zinc has. The promoters of Vedanta thought that they could use the cash to acquire asset owned by Vedanta itself, so that they can then sort of take the cash out to the holding company, which is Vedanta Resources Limited, and then pay off their debt. So obviously, the government proposition of using either doing a share swap or a rights issue, etc., doesn't help Vedanta Resources at all, because it requires cash to pay off the debt.
So, what is the way forward?
So, what will the CFO of Vedanta Resources do? I mean, obviously, it will be a problem if they are not able to pay the debt holders, which is the bond holders or other debt which they have taken. So, they will have to refinance them at slightly higher cost, or two is they will have to renegotiate with the current bondholders itself and defer it for some more period of time. So the bondholders recognize that Vedanta itself has a lot of mining assets across the world. One, of course, they can sell off some mining assets to third party, probably to Rio Tinto, etc., if this HZL deal doesn't happen. Because at the end of the day, even here, they are trying to sell off some zinc mines to Hindustan Zinc Limited. So those zinc mines themselves could be sold to some other third party. Obviously, they may not get as much valuation. So the options to the CFO of Vedanta definitely exist, and they will not just default because there are actual assets underlying which are there.
The fallout of Hindustan Zinc's asset acquisition not going through may be that Agarwal will find raising fresh funds at a reasonable cost challenging under the prevailing conditions. Moreover, as one Bloomberg columnist points out, Agarwal cannot afford to court the central government's displeasure at this point in time, because that could upset his semiconductor ambitions.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.